All right, so right now in this video, we are going to talk about the reverse mortgage loan sizes, how they're changing, well, how they've changed over the past 6 months or so, and how I project them to change over the next few months with the Fed finally deciding that they might cut interest rates. So if that's interesting to you, stick around. This will be a pretty quick video, maybe not the fastest one, because we're going to go through loan sizes. We're going to go through ages 55, 62, 72, 82, and 92, and we're going to look at home values of 400,000, 700,000, a million, and 2 million, and we're going to compare what you could get from a reverse mortgage back in December of 2023 to this very instant, and it is late August of 2024. Then finally, if you stick around to the end of the video, like I know you will, I'm going to show you exactly how you can be put on my notification list for when loan sizes go up or when loan sizes go down. So stick around for that. I've got a pretty neat tool that you can use to track it. So without further ado, let's go to the screen. Let's go over to my slideshow here to the reverse mortgage calculator, and we'll go through this as quick as I can. But again, this will go in pretty deep as far as giving you the information, so you can not only know what it is right now, but you can also kind of calculate out what to expect later on. So how do we calculate reverse mortgage loan amounts? Well, there's two things you know, and if you've watched those Tom Selleck silly commercials, you'll know the first two. Those are age and home value. But really, the reason why we're on this video is there's one other determinant that's more important than age, and I will argue more important than home value, at least for the HECM, which is the government reverse mortgage, and that is, drum roll, interest rates. So interest rates have a major determinant as to how much money you can get, or I should say better, what percent of your home's value you can take from a reverse mortgage. So we're going to get into that. We'll look at where the rates are right now. But real quick, just so you can see that I'm qualified to talk to you about this. My name's Jason Eichmiller. This is a picture of my whole family in a movie theater. Molly's throwing up, my 10-year-old Molly's throwing up whatever sign she's throwing up. You can see me. I'm the tan guy in the dark. The rest is Molly sitting on my lap, Jason, Alyssa, and my wife, Bridget. This is the website, reversequotes.com. Uh-oh, it's speeding up here. There you go, reversequotes.com. And, oh, there we go. I'm just going to pop my contact information below right there. It's going to stream for the rest of this video. But if you want to get in touch to see what you can qualify for or learn how a reverse mortgage would work specifically for you, then feel free. You can call me at the below number, 888-309-9705. Email me or go to this site, Reverse Quotes, and we can plan a time to talk. Now, on the site, your form submit will be on the right if you're looking on desktop, or it'll be right below if you're on your mobile phone. And if you want to see how other seniors feel about it, just scroll about reverses. And these are specifically people that I've helped. Just scroll down and I'll have interviews with my clients and clients' children. So this thing always pauses. But here's a couple of testimonials that I've gotten recently. Hold on, let me see if I can put it on pause right here. This always acts up. This PowerPoint it always just decides to speed along. But anyway, if you want to actually read these testimonials, then go ahead and push pause, and you can read them. If you want to see others, then go to reversequotes.com or email me. I've got a whole ton that I don't even publish here. So let's get into this. Enough about me. Let's talk about how this reverse will work for you right now. So, common theme. When interest rates decrease, what happens to loan sizes? Well, when rates decrease, loan sizes increase, and vice versa. If you've been following this for a while, you've known that as interest rates increased, and here's just kind of a chart from Trading Economics, from where rates were back in 2022, and they bumped up, and they bumped up, and they bumped up, and they bumped up, and now they're running kind of stagnant. As the rates increased, then you would qualify for less money with a reverse. And finally, we're kind of at that point where rates are, well, we expect next month Powell's going to decrease the Fed limit. We just don't know if it's going to be 25 basis points or 50. That's kind of getting into techno babble, but suffice it to say, we're looking okay. So, did I get too technical on you? Maybe. So if you want to watch this again, go ahead. And if you'd like me to explain it again, then just go ahead and push pause on the video and rewind it. I'm not trying to turn you into an interest rateologist or a reverse mortgageologist, just trying to give you an idea of what happens when rates move. So, how has reverse mortgage money changed over time? And what we're going to do is, just to even it out, we're looking at a 72-year-old with $1 million home value. So we'll compare December of 2023 versus August and September of 2024. Well, you can see that since December, the one-year Treasury rate has actually dropped from 4.95 to approximately 4.38. I ran that 4.38 a couple days ago. I think it's 4.365 now, but this week rates aren't changing anyway. And again, at the very end of this video, I'm going to show you exactly how you can understand a few days beforehand what's going on with the interest rates and what that's going to mean for your reverse mortgage loan amount. So let's look at the HECM loan size and the proprietary loan size from December of 2023 and now. By the way, again, we're going to do this for age 55, 62, 72, 82, and 92, but figured you'd want to see kind of a trend with the interest rates. So HECM on $1 million home value, 362, well, 361.9, whatever, it's pretty close. Back in December. Now we went up almost $17,000. Pretty okay, right? A few percent. So 378.5. Proprietary, same thing. It was returning 364.7. Now it's returning 381.5. Pretty okay, right? Not bad. We are going in the right direction. So if you've held off, congratulations. You're in good shape. You can do a reverse mortgage now, and you can get more money out of your home than you could months ago, or even last month or the month before, because these loan amounts have steadily creeped up. So now let's go into age 55, 62, 72, 82, and 92, and I'm going to run through these really quick. And again, if you want to study it, then go ahead and just push pause on the video. All right, age 55. Excuse me. Home value, 400. First of all, you can see with the HECM is not available. So why is the HECM not available for age 55-year-olds, but you can do a proprietary? I'm going to explain it in a couple slides, I think, but go ahead, and if you think you know, go ahead and comment that below. I want to see what you think. So HECM, not there for 55-year-olds. Proprietary, December was 106, now it's 120. That's a pretty big jump. The proprietary, $700,000 home values. It was 200, now it's 213. $1 million home value was 287, now it's 304. And $2 million value, it was 578, now it's 616. So you can see your proprietary, if you're in the process for a proprietary or you're looking to get a proprietary, be thankful that you got it now, or you're getting it now, and you didn't get it a year ago or 8 months ago, right? And for people, by the way, I'll digress a little bit. For people who, if you're in this and you got a reverse mortgage, either late in 2023, anywhere from about July 2023 to February or March 2024, you're going to want to think about redoing your reverse, because if your equity, if your home value stayed about the same or grown a little bit, it's going to depend on where you're at, then you might be able to redo it and get more money. Now, generally, you'll have to been in the loan for a year, so we're looking at September of 2023, but planning is good. And I've got a bunch of my current clients who did this with me last year, and early next year, who we're looking at numbers right now. So when they hit that 1 year, then we're going to fire, and then we're going to get them more money out of redoing their reverse. Anyway, age 62. Now, look at that. Age 62, you're looking at the HECM coming into play. Again, why is the HECM into play at age 62 where the proprietary is into play at 55? Tell me what you think. So HECM, you're looking at December 2023, it was 117 and change. Now it's 122, so it went up about a little over $5,000. The proprietary still just crushed it over that past 8 or 9 months, so 116 to 128 on a $400,000 value. 700,000, you can see Heckham still increased about 4. The proprietary increased about 12. $1 million home value, Heckham's up about 5 again. The proprietary is up 18 or so, 17. And $2 million value, look at that. The Heckham is up slightly, but the proprietary is up pretty drastically. So like $38,000, 30, 40, 50. Yeah. So question though, look at this. Look at the 1 million versus the 2 million here. You've got the Heckham at 318.5, and then if you double the value, the Heckham's only at 367.3. Why is that? Again, comment below. Let me know what you think. And we're going to tackle that right now. So you have with the Heckham, again, the government reverse mortgage, you have a maximum home value of $1,149,825. In 2023, it was a little bit less. It goes up a little bit every single year. So the Heckham max value, remember here, let's go back. I'll show you at 62. With the Heckham $1 million home value, you're getting the entire thing. But when your house is worth $2 million, you're only doing the Heckham off of 1.149 million. And so that's why it's so close. And by the way, this green down here, this tells you that at X age and X home value, which loan amount is going to maximize your cash. What's going to give you the most money? So at age 62, the proprietary is winning, but we'll follow it. And by the way, the answer to the other question, the minimum age for a Heckham is age 62. All right, let's do 72. Heckham, winning now. All the way up, 400, 700, $1 million, $2 million. Heckham is, look at this, $2 million, 401 to 436. $1 million, 367 to 378. You can read. $400,000 on the proprietary. It's up 12. It's up 13. It's up 18. It's up 30 something. So you can see that, again, over time, we're winning now. We're doing a lot better now than we were 8 months ago. Age 82, I told you we're going to blow through this. So Heckham still wins now, right? Heckham growing, 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 growing. And for the proprietary, looking at 11, 13, 18, again, and 40. So at age 82, we're doing well. But now look at what happens, and look at, I want you to hit pause and just remember these loan sizes for the proprietary at age 82. So 191 on a 400, 340, 46, 981. Now what happens when you turn 92? You grow, your loan size grows, but look at this for the proprietary. 206, 365, 522, and $1,050,000. So finally we're up on the million, but look at what it was before. 980, 486, 340, 191. There's a very slight growth in the proprietary versus the Heckham growth. Drastic growths. So once you, here's the moral of the story with this thing, and you can see by the green that the Heckham is finally winning when you get older. So what does this mean in English? What does this trend mean? It means that once you get up to your mid-80s or so, then the Heckham actually continues to grow at a way faster, way stronger pace than the proprietary. Okay? So again, once you're older, the Heckham's going to return more money, all things being equal. Now, again, we went through this really fast, so if you want to rewind and just write down those numbers, or if you're not in that exact age group and your value isn't exactly what I'm showing on the screen, if you'd like to know exactly what you can get out of this, then drop me a line. Again, my contact information is below. So now real quick, let's just take a second and we'll look at, because we're comparing the Heckham versus the proprietary, let's see who should get what. And again, this is high level. If you want a deep dive into your personal situation, then feel free to reach out. But the Heckham is a great program if you want flexibility, if you want credit line growth, if you want monthly income, If you want any combination of those, let's say you want a little bit of cash up front, you want maybe a little bit of monthly income, and you want a credit line, or cash up front and a credit line, whatever that is, then you're going to do the HECM, all things being equal. The HECM is amazing for a retirement safety net. It just is. Gives you the flexibility, gives you that growing line of credit. I'm not talking too much about the line of credit, but I've done a few videos on it recently, so check those out. The proprietary, if you've taken cash out within a year, you want to do the proprietary, but that's kind of nichey. If your house is worth obviously over 1.149 million, then you're going to want to do the proprietary to get as much cash as possible. And finally, if you need all of the cash right away. See, the proprietary, it gives you all the cash right away. It doesn't limit to you. One of the things that the HECM limits you with, say you're free and clear $1 million house. Let's say that you qualify for $400,000. I'm just making that up for this example. With the proprietary, you would get all that money right away. With the HECM, don't get all that money right away. With the HECM, you get about 60% of it right away. Excuse me. And then you have to wait a year for the other 40%. So you can see, again, different strokes for different folks. I do a lot of proprietaries for home health care when they need money up front and you can't wait a whole year for the extra 40%. For lines of credit and retirement planning, it's almost all the home equity conversion mortgage. I should say that in some states, the proprietary reverse has a line of credit. It's just not that great. It's only there for 10 years, and you only get a very, very small interest rate bump over the past, or over the first 7 years. All right. So now, as I promised so now you know the difference between the HECM and the proprietary. And again, if you want to look at, hey, what's right for me? What should I do? Then feel free to give me a shout. Contact information is scrolling. So now I promised you in the very beginning that I would let you know how you can figure out where interest rates are going and what they're going to do on a weekly basis. So HECM rates, and this is not for the proprietary, by the way. The proprietary, they change very, very occasionally. For example, one of my investors dropped the interest rate 20 basis points last week, but loan sizes haven't changed for them yet. HECM, though, it's more scientific. So HECM rates change every Tuesday. All right? So every Tuesday, we're going to know, I'm filming this on a Monday, by the way, so tomorrow is Tuesday, and by the way, the rates aren't going to change they're not going to change tomorrow. They're going to stay the exact same, which means the loan sizes are going to stay the exact same. But how do I know that? Do I have a crystal ball? My answer is no. My magic crystal ball is broken. I'm sorry. So we get notified this by our investors on Fridays. So on Friday, I was notified that the rates aren't going to move. And I'll show you what the notification. It's nothing fancy. You'll see 3 of them up here. One, it says, and this is back from April. So back in April, it said that the 10-year CMT was going up, which means that lower HECM PLFs. A PLF is technobabble for loan sizes. So they could have easily said lower HECM loan sizes, but they've got to be all fancy with industry jargon. So again, rates went up back in, I guess, April 9th through the 15th, which meant that my clients after the 15th were getting less. Now let's look at this one to the right. So this is the one that actually came out on Friday. The 10-year CMT will be 3.83, which is 5 basis points lower. But because it's barely a change, a tiny little change, there is no change to PLFs, no change to loan sizes. So that's how I know. I can tell you on Tuesday, the rates and the loan sizes are going to be the exact same as they were last week. And finally, here they go. They were a little bit lazy on this email. They didn't say the date range. They said the 10-year will be 3.991, which is 13 basis points lower. Again, we will see higher PLFs/loan sizes as a result. I get these every single Friday. So if you're interested, and this is free, by the way, I'm not charging for any of this stuff. If you'd like to see where the rates are going on a weekly basis, comment below. Shoot over a comment below on this video, and put your email address. I'll add you to the list. and you will be notified every single Friday as soon as the rates come out. Sometimes they come out later in the day, which happens sometimes, and I'll do it Saturday morning. But every Friday, gonna send this thing out. Especially if you're looking at a reverse, it's good to be able to keep up on this. So that's about it. I'm going to leave you with a testimonial from Lane, who closed about 3 weeks or so, 4 weeks ago, something like this. Great guy. I feel like we're friends now. And it's just, I think I've said this before. If you've seen me on the videos, if you want to see Lane, then just rewind it and you can read the whole thing. This is the website again. If you want to get in touch with me, you can call me, email me, or put your information in on the website. But now I think I've said it enough times before. If you've seen me on these, I really get a joy from helping folks and changing their financial trajectory or their financial future. It's so neat seeing somebody who had a little bit, maybe depending on their situation, maybe not doing so well, maybe thinking like, oh my God, my retirement money might be gone, or I need to plan for home health care, or maybe my parents need home health care, or my expenses are too high and I want to cut some back so I can actually enjoy retirement. And that really, I get a kick out of that. So if you'd like some help, if you'd like me to take a look at your situation, of course, I'm glad to dive in. I will ask you a lot of questions, and hopefully you ask me a lot of questions, but I'll be giving you a lot of information. But you'll know exactly how this reverse mortgage will work for you, what you can do, and what you can't do. And then it's up to you to make a decision. And of course, I'll give you my input on, number one, if you can even do it, because still with the equity, a lot of folks can't. But if you can, then I'll show you exactly how you can do it. And normally we get these things. Lane was, from the first time we spoke till closing, was 6 weeks. So from application to closing was just around a month. I have Ursula, who's closing today. Alice is closing today too. I've got two closing today, which is wonderful. But we actually got the appraisal in last Monday. So the file went to underwriting on Monday, and we're closing her today. So don't hold me to that. That's pretty fast there, but we do get these things. Once you decide that you want to do a reverse, we'll get them done. We'll get it done very, very quickly for you. So that's all I've got from here. Again, I wanted to be somewhat short, although I know that this isn't the shortest video in the world, because I wanted to get through 62, 72, 82, 92, and 55 and the different home values and really show you what's going on with the economy right now. All right. Thank you so much. I really appreciate your time. And if you need me, I'll do my very, very best for you. All right. Take care of yourself.